and 58 pence sterling.
For more on finance, we're joined by Rod North, Executive Director at Bourse Communications. Rod, good morning.
Good morning.
So everyone's expecting this rate cut.
Yes, they are. And I think one of the key sort of indicators that we've seen in recent times that has been of great concern was that increase in the unemployment rate, particularly for last month. We'll get another set of figures out this week. So we've got that rate up at 5.7%. And then I suppose it came as a bit of a surprise when the federal government put out their economic statement last Friday and said their forecasts were to see the unemployment rate move up to 6.25% over the course of sort of 2013 into 2014. So, of course, when you look at what can happen to try and get people to get their businesses fired up and moving again, I suppose in many respects with the people that I talk to, people have sort of felt this year has been a permanent election campaign. So a lot of people have sort of not gone for growth, not employed. They're sort of waiting. We've been in this waiting game. So that sort of hasn't helped. And one of the sort of few measures left when there are no sort of fiscal bickies left is to use monetary policy. And I think the Reserve Bank, in an unprecedented way, if they lower the cash rate again today by 25 basis points, we will not have seen that happen since the figures were recorded from 1990, that during an election campaign the cash rate has gone down. Although there was a precedent back in 2007 when we saw the demise of the Howard government, when rates actually went up. But we were back at sort of 6.5% and rates increased 25 basis points during that campaign. And it is unusual to see rates move either up or down during an election campaign.
Now, a key factor in today's deliberations by the RBA board will be those pretty weak retail figures out yesterday. We've known for a long time the retail sector has been struggling. It's tough out there, isn't it? It
is very tough, and particularly those figures, which are the June figures, showed a nil increase for June, which is unusual because June is usually a period where there are a lot of sales on and normally record some of the biggest figures that you'd see. And of course, what most people were predicting was that we would see an increase of 0.4%, but for it to be benign, and actually the lowest figures I think recorded in over 12 years was not a good sign. So all these factors are sort of mitigating that, you know, the Reserve Bank, you know, will be lowering the cash rate today, and I still feel there's probably the potential for some further drops in the cash rate, and we'll probably see it settle around sort of, you know, 2% or 2.25% over the course of the next few months, which is not a good indication of where the economy is.
No, well, I wanted you to be honest broker this morning in the middle of this, you know, political storm about, you know, who's right and who's wrong. When rates are cut to that level, does it mean the economy is in trouble or not?
It most certainly does, and it's all relative, isn't it? If rates are cut from a much higher level, then you can argue, well, you know, the government's done a good job in respect to managing the economy, but when they drop down to these sort of low levels, you know, this is really saying things are not great out there. One of the few measures left is for the Reserve Bank to use its monetary policy to bring the rates down to a level to stimulate the economy, and people are not spending at the moment. People are saving. They're paying off their debt, but they are not out there spending, and I think a lot of people are really waiting to see whether, you know, the economy will change when we have a new government elected, which hopefully will be a majority.
Rod North, good to talk to you this morning. Thanks so much.
Thank you.
Thank you. Now, coming up, you might remember the tragic story of a New Zealand couple